Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited, and as I speak to all of you all this Monday morning at around about 10 o'clock. After last week Friday correction, not to forget, the Friday's last week correction was after almost about 10 to 12 days of rally that we've seen in the markets, and it has been one with lot of exuberance. Correction on Friday, small consolidation or profit booking, whatever you may call, was the need of the hour and healthy for the market. And over the night weekend, we had one more statement from President Trump. This time it was to do with the H1B visa fees. New H1B visas will attract annual fees of about $1 lakh, is what I understand. I hope I'm right in my understanding. And this will be applicable every year as and when the H1B visa gets renewed. This has led to a little bit of concern, lot of statements from all those companies in US which are dependent on expats getting technology and brains into US via H1B visa. Almost about 73 or 74% of total number of H1B visas utilized by India globally, and we had a knee-jerk reaction this morning. We opened up with gap down, but since then market has taken this negative news flow on the IT sector with a lot of positivity. Markets have recovered from the lows that we have seen in the morning. As I speak to you, there is single digit downward correction on Nifty, and almost about 80-90 points downward correction on Sensex. Both of them have recovered. Even the IT sector index and some of the stocks, IT sector stocks, which had opened up with a deep correction, they have managed to recover from the lows. Today is 22nd of August. First of all, wishing all of you all on behalf of Geojit Investments and myself a very happy Navaratri. May Goddess Devi shower her blessings on you all and you all stay healthy. So now talking on the markets, well, today is 22nd of September, first day of implementation of the new avatar of GST 2.0. A lot of views are coming in, recommendations are coming in from various participants, stakeholders, government ministers are also speaking about this. And our understanding, friends, is there are not only this new avatar of GST, but there are two other things that we need to keep in mind. First one was when the announcement was made in the budget by the Honorable Finance Minister Srimati Nirmala Sitharamanji of excluding all those individuals who are earning 12.75 lakhs, they don't have to pay tax. Then come June, we had the onset of monsoon. We have had a decent monsoon in some places. It was excess, but overall, now that the withdrawal of monsoon has started, the verbatim from the Met Department or SkyMet is that there has been fair amount of distribution of rainfall in India, and that will lead to a very robust agri output record. It can be. So that was the second one. And third one, of course, was the big bang reform, which is not going to stop as we go forward also. Government is going to take appropriate steps as and when it is required to bring in new policies, change certain policies so that it supports growth, consumption, and the GDP growth rate. So the big bang reform getting implemented today is going to drive consumption to the next level. It will not be immediate, friends. We had discussed this also earlier. Whatever changes the government has made of course, it has started from today, but the major positive impact on sectors, companies, consumption, spending capability and capacity will be visible at ground level from third quarter, that is October, November, December, and then it will continue. So all your discretionary, non-discretionary, consumption-related companies sectors were in the spotlight even when the Honorable Prime Minister made his announcement on 15th of August from the Red Fort. And of course, then we had the clarity announcement coming in from the Finance Minister of the new avatar of GST 2.0, and then the rest is likely to unfold as we go into the future. So we expect the positivities to continue, but more data related, more positive numbers will only be visible from October, November, December onwards. Now, to speak about the markets, friends, I think it was good to see a consolidation on Friday. We opened up weak, but we've recovered from the day's low. So the broad consolidation zone for the Nifty spot remains between 25,200 to 25,300 on the lower side. 25,450 to 25,550 is the area where we will see a little bit of more profit booking. And on a closing basis, friends, if we are able to give a close about 25,550 closing basis, remember, then I think it will not be late before we see 25,800 and 26,000. But we need to remember a couple of things. News flows from domestic front is absolutely no problem, friends. The problem is, if any, is from the global front. But that also, the way the market has shown its maturity, we have started to digest that also. More important trigger, friends, is going to be from 10th of October, when I believe the first set of numbers will start coming in for the second quarter. This is going to be a crucial one, friends, because we are at a point on Sensex and Nifty wherein if the numbers are going to disappoint, earnings is going to disappoint, then I think we have to prepare ourselves to see lower levels, because what drives the market and the stock prices is eventually the earnings capability and capacity. Of course, it's going to be a challenging time because this second quarter number will come in after a lot of headwinds in terms of global news flows. So we need to just wait out and see how the companies have performed in terms of their operational efficiencies and capability and capacity. So there will be a mixed number. This is what the anticipation is. But if we are able to sail through with not so very bad numbers, then I think we are preparing ourselves for a higher level. On the India VIX front, friend, India VIX is about 10.45 with an uptick of about 4.80%. On the Indian rupee, weakness of 10 paise, 88.19 rupees to $1. And on the crude oil front, there is a marginal uptick, $67.10 to a barrel is Brent, $63.08 to a barrel is NYMEX. Expect NYMEX and Brent to cool off. We did see decent strength last week, friends. If you remember, we were sub 88 at one point of time, but then we have again. So the global view is that dollar is likely to weaken, and that will lead to a lot of stability in terms of some other currencies which have actually been weak against the dollar, and possibly we'll see some stability coming in. So this mitigating the negativity in terms of the FI selling. I was reading a report, almost 5 lakh crores plus is the investment done by the domestic institutional investors from the beginning of this year, Jan till date, and a little lower number on the sell side as far as the FIs are concerned. So this pull and push will continue unless and until the foreign institutional investors finally decide as to which side they want to be in. And I think that will possibly be much clearer after the second quarter number or thereabouts. So the festivities are picking up. Consumption demand is likely to go up, and it is going to stay for some time. Likely possibility of earnings improvement for certain sectors which are likely to witness a huge relief by this GST 2.0. Picked up two investment ideas, friends. Both are from different sectors. First one is from the consumer durable white good appliances. The name of the company is Voltas Limited. Aspirations in metros, tier 1, tier cities are going up, and so is the aspirations from semi-urban and rural India. And our understanding is that large part of consumption push or positivities in terms of sales numbers going to come in from tier 3, tier 4 cities, semi-urban and rural India for consumer durable appliances. So gone are the days when we used to aspire for ceiling fan or a cooler. I think rural and semi-urban India has overcome that. White good appliances, air conditioning demand is likely to go up, and of course spendable capacity is going to go up. So Voltas is the first investment idea. Oh, before I go any further, small disclosure: all recommendations that we are sharing in this video are a part of our research team recommendations. Our team, our company Geojit or we do not have any personal investments in any of these recommendations that are being given across. No financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interests. So the first investment idea is Voltas. The second one is from the logistics sector, because this is also going to be eventually a beneficiary of goods and services being transported across India because of the lower GST cut, the demand. So the payload is going to go up and earnings is likely to go up. So the second company is from logistics sector, PSU company, Transport Corporation of India. We've seen, GST when it was implemented in its avatar the first time, initial time, that time GST sector stocks rallied phenomenally, but then after implementation they fizzled off. I think this new change and the new avatar that has come in should benefit the logistics sector also. Hence, recommendation from the logistic sector in form of Transport Corporation of India. Mind you, friends, these are all long-term investment ideas. Start at current levels, and on dips you can go on accumulating it. These are not for short-term BTST, STBT, or for medium-term, but these are for long-term. And having 1.5, 2 year plus kind of time horizon would be a decent time frame to get returns from these two investments eventually after you decide and you do a little bit of homework and then invest in these companies. Thank you very much for your patience hearing. I'll see you again next week. Till then, take care of yourself. Bye bye.